In this video, I'm going to show you guys a trading strategy that I have been using the past few weeks that has taken my trading personally to the next level, and I can guarantee it can do the same for your trading. The only thing that I ask is that you watch this video from start to finish. Missing any part of this video can be the reason why you're not finding success in this strategy, because every part of this video is important. It's a simple trading strategy that you can incorporate with the strategy that you currently have already to take your trading to the next level. If that sounds good, hit that like button so we can start the video. And without further ado, let's jump on to TradingView. Alrighty guys, so once we open up TradingView, I'm gonna just go to a random stock. I'm gonna go to Tesla for example, because Tesla has had a lot of volume lately and we want to trade stocks that have huge volume. I've made lots of videos on how to find stocks like this. If you are interested in me making another one, comment down below. Please make a video on how to find the correct stocks to trade, and I'll make a video tomorrow. So before we start, there are just a couple indicators that I would like you to add to your indicators. So actually for now, I'm gonna have you just add one indicator to your, or two. I'll have you add two indicators to your charts. The first one is going to be this one right here. It says WADA Atar explosion, and I'll explain. It's nothing complicated. It's just a volume indicator, just a little bit more advanced than the regular volume indicator, but this one is going to be the one that you need, not the regular volume indicators. And the second indicator that you are going to want to add is your EMA 50. So we want a 50-day moving average, whether it's this one or one that you like using yourself, or whichever moving average that you like to use yourself. And the third indicator is actually one that is already built in, which is our Fibonacci retracements. So I want you guys to come to this Fibonacci retracement level right here, or this Fibonacci indicator right here, and we're gonna change the settings on this. So guys, before we start anything, what is the reason that I am using Fibonacci levels? What is the significance of Fibonacci levels? I'm gonna leave a link in the description of exactly how the Fibonacci retracements and the history of the Fibonacci retracements. It doesn't really matter for our trading, but basically it's an indicator that finds support and resistance levels on stocks, cryptos, whichever asset that we are trading. But it helps with the current markets that we are in, where we have seen stocks that have been moving on an uptrend or on a downtrend. So if you see a stock running down or running up, you want to get into position so you can be part of that rally or that move, but you don't want to just jump in with FOMO at any level. This strategy is going to show you how to find key levels to jump in. So now we're going to go to the Fibonacci retracement. It should be the first one here. And the first thing that I want you to do is just go to the settings right here. And I want your settings to look exactly like mine. We want just these numbers. We want the 0, the 23%, the 38% or 0.38, 0.5, the 0.618, the 0.786, and 1. These are the most used Fibonacci levels, so they will be important for our trading here. And I just like to keep the levels on the right side so we can see them. Now, let's just delete this. Okay, so the first thing that I'm going to do actually is I'm going to go to replay, and I'm going to go to 9 o'clock in the morning, because this is around the time that I'll be opening up my charts and looking for opportunities. So this indicator works for, or this strategy works for stocks that have a clear trend. So I'm going to ask you guys, what trend is Tesla on right now? It's very clear. It's on a uptrend. we can see that it had a low of 101 and a high of almost $200. With this uptrend, we want to get in at levels like this. When it pulls back, we don't want to get into levels right here, even though it made new highs, because if we get into here, we're going to be stopped out once it makes that run down. I'm going to show you how to find the bottoms of these retracements. So what we do is, so we woke up in the morning, we see this uptrend on Tesla. We see Tesla has high volume on the day. And what we do is we're looking for these higher highs and these higher lows. So it goes up, down, up, down, and we look for the latest swing low and swing high. So I would say the latest one is either right here or right here. So let's use this one because this is one of the more obvious ones. We've seen Tesla have a swing high and a swing back low before making that move back up. The way this indicator works is we go to our Fibonacci levels that we just made and we go to the bottom of this swing low. We click that and we retrace this all the way up to the high. Next, we just lock it in so it doesn't move around. And now we go to our 5-minute chart or our 1-minute or 2-minute charts, whichever ones that you like trading on. And now we have some key levels that we can use for Tesla. And what do these levels mean? This 23 means that Tesla retraced 23% from its highs, 38% from the highs, 50% from the highs, you get it. So each of these levels are key levels that other traders look at, and it can be key levels to find entries. We don't want to FOMO and just buy while it's running up. We want it to retrace a little bit, and these levels can be good areas to find retracements. So once we go ahead and play this, we see when Tesla opens up for the day, we can see it finds support at the 38% retracement. So it was at this high and it retraced back to the 38% level, and now we have a better entry. But this is not the only indicator that we use. We don't just buy because it retraced to a key level, and we don't sell because it just came to another key level. We need to use it in addition to other indicators. This is called confluence, when we have more than one reason to buy and more than one reason to sell. So now I'm going to jump onto my 1-minute charts. That's where I usually like to trade. And now we add that indicator that I told you about earlier, which is our volume indicator, and I like to bring it just down here. The reason I like this indicator is because not only is it a volume indicator, but it tells you something really special. So for this one, we go to the settings, and you can make this whatever colors you want. I like to keep it just all white. And then the explosion line this is the important part of this volume indicator. This one here, let's make it a color we can see. I'll make it blue. This blue line tells you that if volume is above this blue line, it is above average volume, which means either buyers or sellers are coming into the market. And guys, remember, stocks move up and stocks move down for one reason and only one reason, and that is volume. Either buyers have stepped in or sellers have stepped in. That is the only way stocks move. A stock cannot move if buyers don't step in. A stock cannot move down if sellers don't step in, and that will be shown in the volume. So if this candles are above this blue line, that means there are more buyers or more sellers stepping into the markets. And if it is below this level, that means volume is decreasing, which means we may not see movements in the market. Now, if we just go back a little bit, we can see that these volume levels are very tiny in pre-market. Once the stock opens up, we can see buyers are stepping in. There's big green candles. So now we have two reasons. Number one, the retracement. Number two, lots of volume, above average volume. Number three, we look at the actual candles and we can see that these candles are full green candles, which means Tesla is looking for a move higher. And we can see it almost came down, found some resistance, but broke through this next key level. And it just begins to trade higher. And where I would personally sell is when we see volume start to decrease. Finally, the other indicator that we added was a moving average, or whatever indicator that you personally like. I just like the 50-day moving average personally. So we can remove all of these. And a better entry for you can be once it breaks this 50-day moving average. So now we have reasons to jump into the stock. It has retraced, volume is coming in, it broke above the 50-day, and we jump into the trade. We can add our take profit and our stop loss. Alrighty guys, I'll give you one more example. We can try on Amazon, for example, and we'll do the same thing. I'll just replay during pre-market, and then we look at a little bit a higher time frame and decide, is this market in a trend? Yes, it's in a uptrend, correct? And then we find the most recent swing high and swing low levels. We have this level here. This is kind of small. Maybe we want to use this. This is a bigger swing high and a bigger swing low. So I find my Fibonacci levels. I go from swing low all the way to the top swing high, and I lock it in. Once I lock it in, I have some key levels to work with. And guys, remember, nothing is perfect. These are not exact levels. It's not 104.54, but it's this zone. And sometimes you can just go ahead and make a zone instead of looking for the exact line, because stocks never come to the exact level. They like to find zones. So we look for some pullback, and what do we see? Amazon pulls back to the 50% retracement level. We can have our moving average there, and we can have our volume indicator. We see volume is coming in. We see we found retracement. We're breaking above the 50-day moving average. And if you wanted to enter this trade, you can go ahead and place a trade here. And remember, nothing is perfect. Therefore, have your stop losses, have your take profits. And I might sell only because it's looking like volume is starting to drop a little bit, and you would take some profits and maybe hold just a couple contracts. Alrighty guys, so that is all for this indicator, or that is all for this strategy. So Fibonacci retracements, these are key retracement levels that a lot of traders like to use, and that we can expect these stocks or cryptos to retrace back to. But we make sure we use it together with other indicators like our moving average and especially our volume. Volume is the most important. Volume, price action, nothing beats that. That is the only indicator that every single institutional and professional trader uses, and we make sure that we take care of risk management. Nothing is perfect, so make sure you have at least a 1 to 2 or a 1 to 3 risk to reward so you can be profitable in the long term. Alrighty guys, that is all for this video. If you benefited at all, I would appreciate it if you gave this video a like and subscribe, and comment down below what you would like to see in the next video. Peace.